Sure. We have seen that, as you said, there's been these blockbuster IPOs that have really proven that there is strong investor interest for companies that are growing rapidly and innovating. Over the past several years, we've had a drought of IPOs, and these types of opportunities to invest in companies like Figma that are growing at 50% plus year over year just really haven't been apparent in the public markets. You had SEC Chairman Paul Atkins just speaking a few minutes ago, talking about the number of public companies dwindling. And all this is just creating, increased demand for tech IPOs in particular. So as we look forward, we see a lot of market enthusiasm, but for quality names like Figma that are growing, profitable, using AI in their business models, and have strong brands.
So as you look forward, you see enthusiasm, Brianne. I'm curious to get your take. I spoke to a venture investor on this show not too long ago, and I was asking him about the IPO market, and he said, just looking ahead, all the uncertainty with the economy and trade and tariffs, he was saying, I don't know how long that window actually does stay open. He sounded generally more cautious, and I'm just curious to get your take on that.
Sure. Yeah. So there's a lot of market exuberance, which we've clearly seen in some of these IPOs just trading, wildly those first few days. And it's not to say that there is a lack of macro uncertainty. We just talked about the jobs numbers are softening, inflation's pulling up a bit. It's definitely not a straightforward story where it's, all thumbs up, all clear ahead for the future. But for a lot of these companies that have been planning and trying to go public or exit for many, many years, Figma is a great example. They were almost acquired by Adobe back in 2022. That was their milestone or their plan for an exit. So they have been waiting for the right market conditions to actually take the plunge. And there are many other private companies like them, these unicorns that have been private for 10, 15, 20 years, that if they have the right fundamentals, yes, there's some macro uncertainty, but now may be as good a time as ever.
Brianne, which are the possible candidates, in your opinion, that would be on your radar who might be willing to test the public markets this year?
Sure. So, several of the names on our IPO outlook for the year have already gone public, but there are a few that we're still waiting on. One of the big ones being Klarna. This is a company that was planning to go public in the spring, table those plans given the volatility in the market post Liberation Day, but they're reportedly now looking at a September IPO. So that will be the next of several fintech IPOs we've seen. You had Circle, Chime, eToro. So certainly fintech is an area where we're seeing more activity, and given Klarna's brand recognition and value in the market, that's one we have our eyes on.
Right now, if you're going to go public, Brianne, do you have to have an AI story? Do you have to be able to just sprinkle some of that AI magic on your S1?
Yeah, I would say at a minimum, you have to try. And Figma, that's something that played into their story as well. They had so many case studies of their large enterprise clients saving, lots of time and money because of the AI tools that they've built into their product. So I think that's a table stake for any company that is looking to go public. And that might be the best option for public market investors at the time, because you have to remember a lot of these pure play AI companies are still very young in their life cycle. They're less likely to be going public in the next few years. So yes, that's bringing more investors into the private markets to invest, but to kind of capitalize on that interest, public companies or contenders to go public will also need to have that as part of their story.
Do you think there are certain kinds of private companies, Brianne, that would be more likely to receive a warm welcome in the public markets in this environment against this backdrop?
Sure. I mean, we've seen a few examples of what has worked, talked about a little bit about the need for growth, the need for profitability. But when we look at the companies that may be coming next, or even the IPOs we've seen in the first half of the year, it hasn't been just one sector or one industry. You've seen fintech, you've seen crypto, which is obviously growing a lot. And given, the regulatory tailwinds, we expect that to continue to be a hot market. But then, Netscope, another name on our outlook, that's a cybersecurity company. StubHub, another one, that's an e-commerce player. So it's definitely definitely not one sector narrative that's driving the market. It's more, are you growing? Are you profitable? Do you have the brand name? And do you have a story that's exciting to investors, especially given the lack of public companies relative to private companies now?
Final question, Brianne. I want to switch gears here because I'm just curious to get your take on this trend of tokenization, Brianne, buying shares of private companies. We've had rules on the books for a while, Brianne. How to invest in private companies, who can invest in private companies. What do you make of this trend?
Yeah, I think the trend just really speaks to the growing demand for individual investors to invest in private companies. It's something we're seeing on EquityZen, where accredited investors can come and invest $5,000 in these late stage pre-IPO companies. And tokenization is one method of providing that access. But I like to remind people that this market is already open to many more investors than it historically has been due to technology and due to innovation that's happening. We see the pre-IPO market as a core market that all investors should have in their portfolio. So we're big proponents of providing greater access. So I'd say that access is already happening. Tokenization is an interesting angle and a way to do that. But of course, we have to think of the private companies themselves and work with them to create frameworks for liquidity and investment access that also meet their needs.